Welcome back. I'm Pratap here. Today is 13th December 2024. In this video, I'm going to explain a very interesting scenario about hidden zone concept apart from HLQ zone analysis. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. At our channel homepage, click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided our Telegram channel link in this video description. Please join at our Telegram channel. You can find the link in the video description. And have you noticed lesson 9.3 and 9.4? We have discussed about hidden body and hidden zones. Invisible, I named it as invisible zones. So now we are learning a concept related to this invisible zone, but a different a variation. We got a very good example, IOC, that is helping me to explain that concept. And also I request you complete Q&A 2 video, question and answers, second video. You can find it in Q&A playlist. I have also provided the link in our Telegram channel so that easily you can access. Today I have provided that link. So please complete that lesson, because understanding dynamic view is very, very important. See, every zone, it is not possible to identify with your naked eyes. Of course, 90% it is possible, but the 10% scenarios, they are not possible to identify with naked eyes. You need to do some work, especially for finding these hidden zones or invisible zones. So that you can identify with the help of the dynamic view. Because prices are dynamic, market is always dynamic. That dynamic view understanding is different. The dynamic view understanding is very important for understanding the failed ERC candles. Wherever these failed ERC candles are there, most of the time you will find the hidden zones. Okay, you may ask a question, why can't we ignore these 10% scenarios? Because we are getting perfection in the 90% scenario. So that we can ignore these concepts. Because institutions know you are not aware of these concepts. That's why nowadays they are placing majority of their order flows as per these concepts. Because people have not identified these concepts. That is the reason why many people are not aware of these invisible zones concepts. When institutions apply these concepts and creating the zones, mostly we retail traders won't identify them, and we don't try to capture our trades by placing our orders near the institutional order flows. That means our order flows doesn't disturb them. This is the goal of the institutions. Anyway, we will discuss them in detail. First, let us look into this IOC. Yesterday, our software identified this as a stocks near high liquidity zone. How it is looking? Our software identified this as a rally based drop. We have a rally candle, 3 base candles and drop candle. The moment you draw this zone, this is a pierced zone it looks like. See here, the candle here is pierced slightly. Once a zone is pierced, is it valid? No. But our software is not showing this zone as a pierced zone. Because a couple of members sent me the message. This is a pierced zone. So we can't use this zone because it is pierced. But actually it is not pierced from the dynamic viewpoint of view. Now I have drawn this zone static viewpoint of view. But our software uses dynamic views. That's why perfectly it identified this zone. Institutions also nicely they are playing in this zone. Today it gave a very good profit from this zone, short rates. Maximum ROI you got compared to other HLQ zones identified today. This is the one got the maximum profit. First of all, why such kind of zone is created? Because we as a retail trader, we see this rally base, 3 base candles drop is a zone is pierced, so it is no more valid. We won't depend on this zone. Where we will be depending? Probably here, somewhere here, drop base, drop we will be depending. People who are not aware of these hidden bodies, hidden zones, probably they will be focusing on this zone, drop, base, drop. Is price reached this level? Is this zone violated today? No. See the wick, today we got a very good profit. Happily all institutional orders are executed. Because none of us place our orders here. Why? Because according to us means not talking about NeoStock students. I am talking about the general supply demand zone traders point of view. For them it is a rally based drop and this zone is a pierced zone. So no more it is valid because it took the entire order flow. That is how we feel. But how to understand this zone? Why NeoStock software did not identify this zone as a pierced zone? Let me show you the report generated yesterday. Only premium subscribers might be knowing. So that's why let me generate that report. So it is a daily supply zone. I am opening stocks near daily supply zone. So here you have IOC, high liquidity zone. This is a high liquidity zone. When is the leg-in? 29th October, 3 base candles. And the 4th leg out, what we do? We go to the chart and this as a leg-in, 3 base candles and drop. What our software is showing? This as a RBD, rally base drop. You will be drawing the zone exactly how I drawn here now. Actually this is not the right way of drawing. Why? You will be learning very soon. This is a rally base drop. Immediately you see this zone is pierced. So it is not a valid zone, but is our software is showing this as a pierced zone? No, look into the pierced count. The pierced count is 0. Why software is not showing? That's why always in the zones you need to look for, in the software, in the zones you need to look for even the 2 parameters, zone high and zone low. Look into the zone high, 147.02 paisa, 147.2 paisa. This is a zone high. But what is the high of this zone? The high of this candle? 145.74. The high of this candle is 145.74. But our software is saying 147.02. Where is 147.02? Let me draw a horizontal line so that you will understand in much better way. 147.02. Okay, let me adjust the value. 147.02. But where is that? None of the candles are near this blue color line. Look into this blue color line. None of the candles. Even if you draw up to here, then how come this area is coming under the zone? Within this zone, how this area is coming between this blue color line and this distal line of this zone, whatever the area is coming, from where they are coming. That is what you have to understand. To understand that, first you should focus on this legging. This legging is having a hidden body. Have you noticed that? That is what you learned in invisible body in lesson 9.3. You learned the concept invisible body. I explained. That is what hidden body. So you need to add this to this candle. From where you will be adding? From the previous close. The moment you add the hidden body, the body will be, especially you will be using this concept wherever the gaps are there. Remaining, you will be drawing the zones in a normal way. But here there is a gap is there. When there is a gap, the hidden body should be added to this candle. The moment you add the hidden body, this is looking like a drop candle, right? But how can software is saying rally? Actually, it is not really drop. This is a failed ERC candle after you add. Why? Because I apply the dynamic. Whatever the concept I explained in Q&A 2 video, remember that concept. That's why those people who did not attend the Q&A 2 video, first you should complete and then you should listen this explanation. Then only you get clarity. Because I already gave very good examples with clear diagrams. Step by step I explained the hidden view, how it will be changing. Now that flexibility is not there, that I explained in the presentation. That's why I have drawn everything, explained step by step. That is the reason why I am asking you, complete that lesson first, so that you will get an idea how dynamic view market will be changing, or candles will be changing, time to time, especially failed ERC candles. See what happens, I am assuming you all completed Q&A 2 video and are able to understand dynamic views. According to the dynamic view, what happened when market starts from this previous close, because the body is starting from here, hidden body, and look into the open of in this candle. That means you have an entire drop candle initially when market opens. But at the time of closing the market, again what is happening? Market is rallying and finally closed here. It is having some body, but that body is not good enough to identify as a drop candle. So due to that, our software recognized that candle as a failed ERC candle. In the failed ERC candle, software is having a very intelligent algorithm to identify what kind of failed ERC candle is a rally candle or what kind of failed ERC candle is a drop candle. That kind of intelligence our software is having. As per that, our software recognized initially when market opened, this is a very big red candle. Forget about this green. Initially when market from this close to today open, a big red candle. After that, what is happening in the dynamic view? Market is rallying and finally closed here. And by the time it closed, the drop candle body has been reduced and it will become a failed ERC. That way software identified this as a rally candle. And this rally candle, obviously from where to where you have to draw? From its open, because the highest of the candle is from here. So that is the reason why in the rally candle, you have to draw the candle up to this blue color line. So until here you need to draw. So this is the way you have to draw until this green color candle. There is no, why this green color candle? Because as per the dynamic view, this is the open of this candle. And from here it is the entire thing is a drop. As per the dynamic view, after that market was rallying, that's why it is a rally candle. And this is the highest wick of the candle. For the failed ERC candle, this is the highest wick. In the rally candle, highest wick also will be considered. Rally based drop, highest wick also will be considered. That is what you learned in your phase 1 training program. I have explained in lesson 4, all the 4 patterns I explained. At the time, which pattern you have to use highest wick of the leg-in candle, you already learned in lesson 4. In rally based drop, among leg-in, base candles and the drop, whichever is having highest wick, that you need to consider. Because this candle is an invisible body candle. Your highest wick is not visible to the human eyes. Why? Because it is a dynamic view. So this is the highest wick, the blue color line what I have drawn from the previous close. These concepts should be applied only for failed ERC candles. Remaining candles, whatever you learned so far, that is as it is you apply. Whenever these kind of gaps are there, invisible bodies are there, at the time you should be very careful. This is a special scenario. See, if the close is a little below, probably our software would have identified this candle as a drop candle. Because in the dynamic view it was moving and got sufficient confirmation to move to consider this as a rally candle. As a failed ERC, it is a rally in the dynamic view point of view. That's why our software has suggested the high of this zone is 147.02. If I draw the zone like this, so maybe a little extra I have drawn. Okay, this is perfect. Now you see, the highest wick of this candle, the high of this candle, this zone is 147.02. Till there we have drawn. Actually, from where this 147.02 has come? From the hidden body it came. It came from the hidden body. Is this hidden body visible to you? No. That's why our naked eyes, humans' naked eyes, it is not visible. Many supply demand zone traders will say, supply and demand zone easily with our naked eyes we can identify all the zones. I am an experienced person. I trained in such a way, my eyes will recognize all the zones in a chart. Some people will claim like that. But is it true? No. Maybe that is 80% level or 90% level, it is possible. But wherever we have these invisible zones or invisible body is there, with the naked eye, you can't easily identify. You have to do some work before identifying the exact coordinates of the zone. That is what our NeoStock software is doing. That's why it is a special software. What human can't identify easily, the machine is doing, software is doing the things. See, now the moment you draw this zone with the hidden body by considering the hidden body, and as per the hidden body, you apply all the 4 patterns. Rally base rally, drop base rally, drop base drop, rally base drop. When you apply the concepts, whatever the rules you learned, see, this is a rally base drop. But your hidden body is here. Where your hidden body? Your hidden body is at 147.02. That is the starting point of your hidden body. Because it is a rally candle. Up to that hidden body, you need to draw your distal line. The moment you draw the distal line, now you tell me, is it a pierced zone? No, it is not a pierced zone. If you don't draw up to this hidden body, is it a pierced zone? Yes. If you draw like this zone is a pierced zone. People who are not aware of these dynamic views and invisible body or invisible zones concept, they will not identify this zone. That means this zone is practically, there is a zone, but actually it is acting as a hidden zone. Institutions made it as a hidden zone. How they made it as a zone? First they ensured prices entered beyond the distal line. For the people who are not aware of invisible body concepts or invisible zone concepts, they will be drawing the zone like this. Institutions cleverly make sure this zone is violated. Pierced means zone is violated. Now immediately what you do, you remove this zone from your chart. You won't consider this as a zone. But actually there is a zone which is invisible to you. What is visible to you is like a pierced zone. But what is not visible to you, that is a invisible zone. What is not visible to you? This is the one. This is the zone not visible to you, strictly speaking. Why? Because you need to understand this candle as a failed ERC candle as per dynamic view. Static view, it is a rally candle. It is not a failed ERC candle. Again, within failed ERC candle, how we need to consider that candle as a drop candle or rally candle, that is another challenging. But at least our software is having intelligence to recognize whether it is a rally or base. That's why it is, even after adding the hidden body, software consider this as a rally, not this green color what you are seeing. The dynamic view, the whatever the failed ERC candle our software is seeing in the dynamic view, that candle is recognized as a rally candle. See, actually looks like both the dynamic view point of view, this is static view point of view, the candles are looking like a rally candle. But what is the difference? In static view, this is the high of the zone. For static view, this is the high of the zone. But dynamic view, this blue color line is the high of the zone. That's why in the dynamic view, you will be drawing the zone like this. But static view, you will be drawing the zone like this. And this is a pierced zone in the static view. But dynamic view, it is not a pierced zone. Dynamic view is an invisible zone. Static view is a failed zone. Static view is a failed. That means it is a violated zone. It is not valid to keep in the charts. That's why the real zone is an invisible zone. What is the real zone? This is the one. With the dynamic view, this is an invisible zone. That's why understanding invisible zones are very, very important. Invisible zone means the zone's real picture is not really visible to your eyes. I repeat again, the zone's real picture is not really visible to your naked eyes unless you do the exact calculations and draw properly. Then the zone structure will be visible. Because there is a gap is there, you cannot consider this zone as it is. First you should understand, because of this applying this gap, hidden body, how this real candle structure looks like. Is it really a rally candle or is it really a drop candle? See, if the price would have closed a little below, our software would have recognized this as a drop candle. If it is the drop candle, then you would have drawn a zone like this. If you draw a zone like this, this is really a violated zone. Institutions exactly they kept in such a way. This rally candle is not easy to identify. But our software is having the intelligence, it is able to identify this candle as a rally. Not in the static view what you are seeing that candle. It is, software is not showing, not looking into this candle like this. Software is looking this candle in a dynamic view. This is the open, this is the close, and rest everything is a big, whatever the green color you are seeing, that is actually a wick for the software point of view. And whatever you are not seeing, that is the body. And the body wick, some calculations are there for the software's point of view, a typical calculation to check how to understand this as a rally or base, a base candle. Rally or a drop candle. Rally candle or drop candle. Some calculations it will verify. And finally, they considered this as a rally candle. Because it considers rally candle, extra order flow is added into the zone, the extra order flow. What is the extra order flow? This is the one. Whatever you are seeing till blue color line, that is the extra order flow. Because this extra order flow has come, immediately our software is telling the zone high is not. The zone high is not. What is the high of this candle? 145.50. Software is telling the zone high is not 145.50 paisa. Software is saying the actual zone high is 147.02 paisa. That's why I added these columns, zone high and zone low. Because I know whenever there are dynamic views, you people will make mistakes if you purely depend on this leg in and base and leg out candles. I know that. That's why I introduced these two columns, zone high and zone low. Sometimes you will see a differences from your static view to dynamic views. We got, if you look into the last 1 year of our HLQ zone analysis, first time we got such kind of scenario. Of course, you might have got these kind of scenarios in other stocks, but not in HLQ zone related discussions. But every day I am discussing about HLQ zones, so our focus will be on those stocks. On those stocks, this is the first stock we got for the last 1 year. Okay, first stock it came, but what is the advantage we gained? It gave a good trade today. That is the advantage. If you would have considered this zone as a failed candle, see this candle is a failed ERC, this candle is a pierced zone, because it pierced the zone. You would not have considered, and whatever the trade it gave today, you would not have taken the trade. But the moment you draw like this, definitely you will recognize. So let us look into that. See how I have drawn drop. This is a rally till this actual hidden body I have drawn. How I have drawn? Because software has clearly told me the high is 147.02. And I know I have developed the hidden zone concept here. And this is the area, the real candle, rally candle. This is the real starting point of this candle because of this hidden body. Till that I have drawn as per the software suggestion, 147.02. I just verified exactly it is working as per the concept or not. So our software is working in a perfect way. Okay, after that what I did, this daily zone I fine-tuned with 75. Why? Because it is a valid zone. If it is not a valid zone, pierced zone, you would not have done this analysis. Simply ignore this zone. Because it is a valid, so I have identified the 75-minute zone. We have a drop, 1, 2, 3, 4 base candles, and again a drop, drop, base, drop. The 75-minute zone I have drawn drop, 4 base candles, drop. Within this 75-minute zone, again, I fine-tuned with 15 minutes time frame. See here, this is again failed ERC as a drop candle. See again, apply dynamic view to this concept. There is no hidden body here, but look into the candle structure. At some point of time, it is a rally candle, but after that, prices were coming down, drop, drop, and finally a small body is left. This is not good enough to confirm it is a rally candle, because majority of the portion is a drop. In the dynamic view point of view, drop candle will be qualified for this. What you are seeing the wick is the body. What you are seeing the body is the wick. That way you can understand for easy remembering purpose. So it is a drop candle. So this is the leg-in candle. Failed ERC candles can be used for leg-in. But leg-out, some special rules are there. Unless we satisfy those special rules, we can't use as a leg-out candle. But anyway, this is a leg-in. After that, how many base candles? 1, 2, 3, 4, 5, 6 base candles. And then a drop candle. And a 15-minute zone is a fine-tuned zone we identified here. We have a 15 minutes fine-tuned zone. Drop, base, drop. So within this 15 minutes area, again we need to fine tune with 5 minutes time frame. See here we have a daily zone. Inside daily we have a 75 minute zone. Inside the 75 we have 15 minute zone. Now inside the 15 minutes we need to find a 5 minute zone. So I am changing the time frame to 5 minutes. Now within the 15 minutes area we need to fine tune. Now go to the 15 minutes area. See, now I am not seeing in the daily area. I am not seeing in the 75 minutes area. I am seeing only in the 15 minutes area. Fine tuning you have to do like that. See here, you have a rally candle, base candle, a drop candle, and then next up some follow through candles, further prices are moving down. A big move from here. But this is our actual fine tuned area. See, because of this big candle, all these candles are looking small. That's why I am hiding that, so that you will understand the real position. Rally, base, drop. We have a fine tuned zone, rally, base, drop. Apart from that, we are also having a rally, base, drop and follow through candles. This is the 5 minute zone as an horizon to this entire 75 minute fine tuned zone. This is the 75 minutes fine tuned zone. For this 75 minutes fine tuned zone, this rally base drop is acting as an horizon. After that 75 minutes zone is created by picking the order, see how prices came down and then further sharply moved down. But the horizon is started from here. That means this is the area, definitely a strong institutional order flow will be there. And when you have to plan a trade in this zone, once this rally based drop is violated, then you have to plan the trade. So today what happened? Prices entered into this zone. But also remember, both these zones are very near, this one and this one. So carefully you should plan. Let us see what happened today. See today market today's market. Today market opened. This is the morning 9:15, 15 minutes candle. Prices market opened here, and after that prices went up, and here our trade might be executed, but here have you noticed the zone is slightly pierced, but after we are already in the trade. If this blue color line, whatever I have drawn, is the stop buffer. After adding the stop buffer, so the trade is within this blue color. But you should also notice there is a LTF zone as an horizon, a little above. Institutions already kept a strong order flow here. Why they kept strong order flow? That you will understand after seeing the next price action. But sharply prices came down. And here a 15-minute zone is there. It reached that zone. I know some of you, because there is a gap up is there, some of you might exit here. That possibility is there. You might have taken a trade and you might have exited here. But according to high liquidity zone's point of view, it reached the target. And another thing, some of you, not some of you, many of you might not have taken this trade. Why? Because let me show you in the 1 minute time frame. This is the morning 1 minute candle. Prices opened here. Moved up, further moved up and reached, and after that sharply pushed the prices. Because the LTF zone, which is there a little above, maybe a lot of strong order flow might be there, that is started pushing the prices down. But our trade is not stopped out because we are within the stop buffer. After that, how sharply it came. But how many of you trades might have been executed in morning 9:15 candle? First of all, how many of you are placing your trades in the morning 9:15 candle? Even if you place, before placing, maybe prices went and might have came down. Maybe it might have happened during the last minute of the market close because market opened here. After that it was moving the entire 1 minute. Let us assume by the time prices reached here, half minute is completed. By the time you placed your order in this zone, let us assume your trade is executed. In that case, prices came sharply. Except that scenario, most of the rest of the scenarios, your trades might not have been executed in the morning 9:15 candle, or many of you might not have placed your trade at all in the 9:15 candle. You might be waiting for next candle. Next candle anyway, you can't place the order because this zone is pierced. Now your target is on the one above order flow, that is 5 minute zone as an horizon to 15 minutes, 75 minutes fine-tuned zone. This is the one. The one above is the horizon, 5 minutes horizon to this entire 75 minutes fine-tuned zone. So this is the one having a very strong order flow. But what happened? Maybe some of your trades might have been executed. Who placed in morning 9:15? Here your trade is executed, prices came and reached the 15 minutes target. Till this 15 minutes target, okay, this is high liquidity zones point of view. I am calculating. Okay, maybe practically we might have exited somewhere in the gap area. Pro gap is there. Sometimes pro gap may push the prices up. But high liquidity zones performance point of view, minimum 1:3 RR should be achieved. That is already happened. Pro gap area, maybe practically we may exit the trade and close the trade. That is a different story. But HLQ zones point of view, till 15 minutes it reached the target. Go to the 15 minutes time frame. See here, you have a drop base rally. And this new target is created during the live market because this candle is during live market. Before that, you might have kept your target somewhere here. Here also you have rally base rallies. Or maybe you might have kept this one, drop base rally. But whatever it is, this is the revised target once the market is open. Until that area, price is reached. That means till this 15 minutes area, how much profit IOC might have given you? 15,161 rupees profit, which is a 10.5% ROI as per one futures margin cost. So this could have been a very good trade for institutions. Why I am saying institutions? Because institutions knows. For us it is like a pierced zone. Okay, retail traders don't touch this zone. And their trade plans might not have been disturbed by the retail traders. Whatever the order flows they planned here, everything they made sure they executed in this area. After that, they kept even much stronger order flow. It pushed the market down. But in this area, all their institutional orders are executed. After slightly pierced only, they pushed it. How they pushed it? Because they kept an horizon a little above that. And that order flow pushed the markets down till the 15-minute zone. This is the way institutions might have captured today during the intraday around 10.5% ROI they might have achieved. In F&O, in futures. Options they might have got even more profit. But risk management is little carefully we should plan in options. Many of you, I noticed, many of you are trading in options. But if you don't plan your risk management properly, then one day you will get a big hit. Maybe high liquidity zones, so success rate is high. Most of you people are not really feeling that hit. Rarely our zones will violate. See, this month only one stock is violated so far. Already half of the month is completed. We have only one stopped out trade from high liquidity zone. Remaining all are successful. All the people who are trading in HLQ zones, the premium subscribers, definitely you might have enjoyed your profits this month so far, these 15 days. And next again during market closing again prices came. This time prices came near to the 15 minutes, the 5 minutes horizon, but may not be good enough to plan our trade. This time you see prices crossed this blue color line. You may ask a question, can't we plan a trade in this fine-tuned 5-minute zone? No, you cannot. Once the zone is pierced, you can't plan your trade in this 5-minute zone. Pierced zones you can't trade. That is what we have seen in LAURUSLABS, right? Last 2 days from the pierced zone only prices are coming down. Even today from that zone only it came. I told the reason in yesterday's HLQ zone analysis. LAURUSLABS 1-minute high liquidity zone created exactly in the pierced zone area. Yesterday's HLQ zone analysis, I explained that point. The same way here, but here the reason is different. We have an LTF zone a little above that. Currently that is restricting the prices to move further. Even see before closing the market, again how it gave a small push. Because this is almost last hour of the, or last 45 minutes of the trading session. Okay. So this is about high OC. See, high OC looks like it's not a valid zone. That's why I'm calling this as a invisible zone as per our concept point of view. Actually zone exists, but it is looking like invalid zone, violated zone. That means zone is not present on the charts. It looks like, but actually the zone is present as per the dynamic view concepts. See how beautifully our software identified this IOC trade, the high liquidity zone. It is not a pierced zone. Many of you ignored this zone high. That's why you thought it is a violated zone. How can software identified violated zone? That way you might have thought. But software did do. It is a very clever. It knows the zones you cannot find, it will identify. It knows it. That's why it is identifying such kind of zones. Because you make these kind of mistakes, I know. That's why I added these two columns, zone high and zone low column. I don't know how many of you are really checking these values every time when you draw the zones. See, sometimes you see the difference, some 2 paisa, 3 paisa, because the trading view might be rounding the value. For stocks having some 500 or above 500 rupees, trading view rounds that value. Say for example 147.02. Trading view might have displayed this as a 147. For small price like 100 or 200, they are giving, trading view is also giving in paisa. There you will see exactly. See here 147.02 trading view also, the close of this particular zone, it is showing 142. 2 paisa. See the close. Observe here when I place my mouse on this candle. Now you observe the close is 147.02. And another thing is when we do corporate adjustment, I am not rounding the value, I am using the exact value what it is showing. But trading view sometimes it rounds the value if the prices are above 500 rupees. Below 500 maybe you will see exact same value between our software and trading view. For 100 rupees, 200 rupees stocks, trading view won't round off. But stocks above some certain value in trading view, they are rounding the values. At that time you see some 2 paisa, 3 paisa difference you see. But ours is much accurate than trading view, because always whatever the price it is, we are using after corporate actions, whatever the value, that value we are displaying as it is. Except the 2 or 3 paisa difference, you will see exact same values. If at all if you see a major difference, there is something wrong. I told you previously also one of the HLQ zone analysis videos, I told during demergers, trading view calculations in the olden days are not really good. That's why some differences you are seeing in 1 or 2 stocks in a rare situations. But okay, otherwise, for the last 1 year or 1.5 year, whatever NSE suggested for demergers, accordingly trading view is also supporting, but old data. But anyway, most of the times we get latest data, rarely we get old data zones. Even if you get old data 2002 or 2003 related stocks, we can't fine tune them in trading view. because the last 1 year data will be available for 5 minutes if you take premium package in TradingView. Other packages, I think 5 minutes also they are giving only last 6 months data in TradingView. I think Essential and Pro packages in TradingView, they give only last 6 months data. But premium package, if you take in TradingView, they are giving last 1 year data for 5 minutes data. Actually, the rule is like this: TradingView will give you display only last 20,000 candles for premium packages, whoever took premium packages, and they will give only 10,000 candles for any time frame, 10,000 candles if you take Pro or maybe Essential packages. That is the only, because of 5 minutes you are seeing 1 year or 6 months data. But anyway, that 5 minutes data is good enough to at least to manage many of our HLQ zones. Rare situations, we might be missing trade opportunities, rare situations. Okay, this is about IOC. Hope all of you got clarity about dynamic views now. And hidden zones. You will be seeing one more hidden zone concept in LAURUSLABS. Once we get into that stock, I will explain. That is also comes under a hidden zone concept. How institutions use different techniques to hide their zones so that we won't enter into their order flows. They are very clever institutions because they know what retail traders are doing. They always study our concepts. They always monitor how we are planning our trades. Their goal is, because of our planning, their trades should not disturb. At the same time, we are also planning. Because I am a retail trader, I am also planning how institutions will think. And accordingly, how we can manage the trade. That's why I developed this software. I want to handle institutions. So that exactly I want to enter into their real order flows. Otherwise, why we get 80% success rate for HLQ zone concept? Because I did that much research and finally able to identify the real institutional order flows with the help of our software and enjoying the profits. Okay, the next, let me close this. The next one is ABBOT. ABBOT is a very good trade. Excellent fine-tuned trade today. This is a 75-minute zone. See, this is a 75-minute zone. Our software identified a drop, 2 base candles and a drop candle. Drop, base, drop. And recently prices entered very near to the digital line, but at the time when prices are coming, again institutions created multiple order flows. We identified by fine-tuning the zones. Go to the 15 minutes time frame. In the 15 minutes time frame, see here, drop, base, drop. And here again, of course you can also draw one more drop, base, drop, but somehow because of this candle, okay, anyway. I consider this here a rally candle, failed ERC candle. See, there is a base candle and then drop candle. You may say this is looking like medium size candle. Apply the concept learned in lesson 9, invisible body or invisible zones concepts. The moment you add from here to here, you get a body and further prices are going, even in the dynamic queue also. This entire thing is a drop candle, a very big drop candle that is good enough to qualify as a leg out candle. If you add the body from here to hidden body, this candle almost looks like this candle. Do you agree this is a drop candle? So this candle also looks similar to this much candle. But this is a rally candle because this is a rally, failed ERC as a rally. See, we have used the highest body of leg in, base and leg out. Leg in is having highest body. Till there we have drawn the zone. So this is the 15-minute zone and this is the zone low and this is the zone high. The rules you learned in lesson 4. For all the 4 patterns we are applying. Where is the distal line? Where is the proximal line? You already learned those rules in lesson 4. See, today nicely prices entered into this zone at morning 9:30, 15 minutes candle. This is a 15 minutes candle. Okay, now let us fine tune this with 5 minutes time frame. See here in the 5 minutes time frame, again you have a failed ERC candle as a rally, you have a base candle, and then you have a drop candle. This is a big candle, large candle, and half of the candle is having the body. First of all, large candles we don't require any bodies. Failed ERC candle, minimum body is there or not, we will verify, and the body is coming out of the zone or not, we will verify. This is not qualified as a failed ERC because it is having enough body, this zone, apart from the wick. So that's why rally base drop. Some price action took immediately following candles. That indicates the power of this zone because it is these candles are not able to break this zone. Generally, all these candles are a reflection to rejections from the zone. Such kind of zones work very well. The zones that are unable to, because institutions are creating some kind of price action here, they want to, but they are ensuring a strong order flow in this area. Generally, it looks like sluggish, right? But HLQ zones, we don't bother about all these things. That is the beauty of HLQ zone concept. All the concepts that you identified, you should not take the trades, all those concepts works for HLQ zones. That's why HLQ zone, we are not bothering about the trend, we are not bothering about the price structures, we are not bothering about price direction, location, we are not focusing. Odd enhancer score, we are not worrying. We are ignoring all those concepts. Even zone achievement also, we are not focusing in HLQ zones when we fine tune the zones. Have you noticed? We never, whatever the concepts you learn, we never focus on any of those concepts. Just a fine tuned zone is there or not. That is what you see. That's it. The order flows we are identifying. That is the beauty of HLQ zone concept. And all these concepts are, whatever you learn, they are applicable for trend-based core concepts you learned. The bullish trade setup, bearish trade setup. There you have to apply all those concepts, but not in HLQ zone. That's why HLQ zone analysis is much easier. Very, very easy. The only thing is you should properly fine-tune the zone. If you make mistakes, obviously, mistakes will happen. Properly, you should fine-tune. While fine-tuning and all, you just zoom the chart and properly identify, draw the zones. That care you have to take. See, today price is entered into the at 9:40, 5 minutes candle. Price is entered, it gave you the trade, and next 5 minutes also, see, prices are within this zone. Even if you miss this, still you have an opportunity in these candles. Finally, we got good time to get the trade here. 100% sure our trade will be executed here. See, prices came near to the 15-minute zone. Here also you have one learning will be there. Previously also once I explained. But some of you might not have listened. If you did not listen in the earlier videos, now concentrate. Price came almost near to the 15-minute zone. Generally what we do, we may exit a little before. Sometimes whatever you are adding order flow, a little above it came and moved up. How can we, then we might be missing. Maybe somewhere here you will realize you will exit. By the time at least half of your profit, or if not half, at least 30 to 40% of your profit is gone. Mostly we exit a little before 15-minute zone, but it might be a little above what we placed our exit orders. So that's why previously I told you observing price actions are very important. See here, before coming to this zone, institutions kept some order flows here. Rally base draw, rally is there. First you focus on this. This is acting as a entry buffer. We don't know this is high liquidity zone or not, but similar kind of concept. Now you draw this demand zone. This is the area holding the prices. If this does not let the prices get into this area, if this is a high liquidity zone, we don't know, right? See here price came very close. Actually it is a test, wick to wick. See, if I draw wick to wick, this is the first test. Prices moved. This is the second test. Apart from drop base rally is created. When such kind of price actions will take place? In high liquidity zones. Mostly high liquidity zones, so LOTL zones will take place. That is a clue. By saying LOTL, maybe, I'm not confirming, maybe there is a possibility. It doesn't mean every LOTL zone is a HLQ zone. No, that is a wrong concept. But possibility is there. We can take some risks in such kind of area. Where you have to take risk in the origin, the main origin. This is the rally base rally. Not in the LOTL zone, so drop base, not placing your orders here. But anyway, we need to exit. So this is the area you can plan to exit the trade. See what happened today? Exactly in that area, slightly pierced and then moved up. This indicates in this 15 minutes area, there is a institutions kept a very strong order flow. They don't want easily prices enter into this area. See, all these observations you have to make when you are doing the trading. You can't easily earn the money, right? You have to do analysis. You learn all these concepts all these days. Every day you are attending HLQ zone analysis videos. Why you are attending? Not to know how much profit we got, right? Just to know any new concepts are there when I am explaining these concepts. These concepts will help improve your trading skills further, because the real concepts you won't see in the theoretical sessions. The real concepts you see in the practical sessions. That's why many new points you guys learned when I am explaining HLQ zone analysis. Some of you might be thinking, okay, anyway I don't trade HLQ zones, I trade in bullish or bearish trade setups. So these videos are not required for me to attend. That way you might be thinking. No, that is wrong thinking. HLQ zone's purpose is 2 points. One is to teach you the new concepts if there are anything when I am finding while explaining the zones. And the another objective is to promote my HLQ zone strategy what I developed for NeoStock software. I want to promote my software. People should know about my software. People should know people should understand the performance of my software. Because new people will be watching my videos, they will understand, they will realize. New supplies, old supply demands on traders. All of a sudden they find my video in YouTube. At the time they will be watching my video and then they realize there is a new concept we are not following for the last 5 years or 6 years. That way they get interest on my software. Ultimately, I need to promote my software, right? That is my objective. I am not a trainer, strictly speaking, I am not a trainer. Some of you people are asking, take live sessions and take. I am not a trainer. Please understand. I am a software developer. My objective is to promote my software. But at the same time, I helped you guys by providing free training. So that you will learn, at least I saved $8,000. Maybe India, some of you people are offering the courses at different price levels, their experience levels. But my level of understanding on this concept is much better than all these members. Because I did all kinds of experiments in this area. So many new concepts I developed in this area. I am comparing with the US people who are providing the training. They are providing 8,000, but definitely if my new concepts, whatever my new inventions added, definitely the cost of this training will be more than $10,000. Even more, maybe up to $15,000. Because many new concepts I developed. You already learned all those concepts. Especially people who learned earlier supply demand zones, now they are attending all my training sessions. They are well aware. Because they know what they did not learn earlier. The hidden zones concepts they did not learn earlier. Trend calculations based on equal high and equal low. It is a new concept I developed. Price direction is a new concept I developed. Lower time frame zone as an horizon to the higher time frame zone is a new concept I developed. And a special price action, the leg out candle, is a new concept I developed. The high probability trade setup rules I developed. Lesson 27, the rules I developed, finding high probability zones, not high liquidity zones. High probability zones, that is what we discussed in lesson 27. It is a new concept. How I mixed EMA concepts and zone confluence together. How I am able to identify zones that gives multiple tests. Because they are high probability zones. Even though they are not HLQ zones. Of course, some of those zones are also HLQ. But still, trend based we are identifying. And when a zone will be violated is a new concept we developed. There is no such concept in the market. At least 80 to 90% scenarios we are in a position to identify 80 to 90. I am not saying 100%. We are in a position to tell a particular zone can be violated. That way many trades we avoided all these months. If we would have taken a trade, our trade would have been stopped out. But well before we are identifying. That is what we discussed in lesson 16. Exactly the same way, you should observe these kind of price actions. Something is there that will prevent prices to enter. See today, this zone did not let the prices enter up to 15 minutes. If you would have exited here, happily you booked your profit. How many times you got the opportunity? This is the first time and this is the second time. What is the extra profit? You get very, very small, negligible profit. We should not be that much greedy when price action is not 100% in our favor. Based on such kind of concepts only we developed aggressive trade concepts also, right? So that's why you should respect such kind of concepts. Why earlier price did not enter into the zone? Who is preventing this zone? Why institutions kept near this zone? That is the way you have to understand. This is not a new concept I am explaining to you. Same concept, maybe couple of months back or 3 months back, I explained this concept to you guys. Sometimes how these lower time frame zones will prevent prices entering into 15-minute zone. Institutions keep very near to the 15-minute zone. At the time you should not compromise you should not be greedy for the small extra profit you are going to get. Okay, so that's why we should exit somewhere here to book the profit within this zone. And what is the profit Abbott has given? Abbott has given 10,886 rupees profit, which is 10.7% ROI. Almost the same ROI as IOC. Those people who missed IOC trade, definitely Abbott trade you should take. And moreover, this trade came after market starts at 9 o'clock 40 minutes, 5 minutes candle, you got the trade. Next one is a HFCL. This is a high liquidity demand zone, daily demand zone. Let me go to the daily time frame. This is a rally base rally. This is the daily zone identified by our software. And this zone is fine-tuned. We have multiple order flows. Have you noticed? We are in the daily, still we are noticing here we have one order flow. This is the second order flow. This is the third order flow. And from here you see prices came and sharply how it moved up. How much profit it would have given? HFCL. This is 6% ROI it has given. If you look into the Excel sheet, it has given again close to 10,000 rupees profit, 9,711. 6% ROI it has given. Okay, how we fine tune this zone? First, let us focus on that. Fine tuning is the skill everybody should properly do. The way how I am doing, you will be in a position to do that. Only thing is properly observe the zones inside a lower time frame. See, now we are going to 75 minutes time frame. In the 75 minutes time frame, we have a drop base rally is there. Why I have drawn up to type 2 proximal for 15 minutes for 75 minutes? Because the remaining portion is going out of the zone. That's why I am limiting my fine tune within our high liquidity zone area. A little extra above is there, okay, fine, but maximum within this zone area. That's why I didn't draw drop base rally from wick to wick. I didn't draw. If it is inside the zone, I will draw wick to wick while fine tuning the zones. Only 5 minute zone type 2 maximum we will try to take our trades to minimize the risk to get the maximum profit. Drop base rally. See, we have a fine tuned, very clean and neat. You can identify. Is there any difficulty in identifying this drop base rally? This is a medium size candle. This is a medium size candle. This is a large candle. Is there any difficulty? No. Because this is a drop, the lowest wick of leg in base leg out candles you will see. Which one is having lowest wick? Drop is having. That's why till the drop candle, leg in candle, we have drawn the zone. Another 15 minute zone. We have a drop base rally. Of course, here you have drop base rally 75 minute zone. Actually, I drawn 15 and 5 minutes, but still 75 minutes also you can draw. This is the 75 minute zone. This failed ERC candle has a leg in, 2 base candles and a rally candle. And this 75 minute zone is the horizon to this entire daily zone. Lesson 22 concept. That way identified. Of course, this is inside, it is having 15 minute zone. Inside again it is having 5 minute zone. That we will see. And not only this is horizon to this entire daily zone, this 75 minute zone. See, drop 1, 2, 3, 4 base candles and a rally candle. This is the 75 minute zone. This fine tuned 75 minute zone inside daily zone. And this fine tuned 75 minute zone is also picked up the orders from this horizon. We have 2 75 minute zones here, LOTL zones. But one LOTL is acting as an horizon to this entire daily zone. But this is within the zone. Next, go to the 5 minutes, 15 minutes time frame. In the 15 minutes time frame, we have again a fine-tuned 15 minute zone here. Yes, here I have to teach you some important concept that I will explain in 5 minutes time frame. Everybody please listen carefully how I am finding the horizons. Many times people ask this question. So far 2 to 3 times I explained this concept, but now again it is very important because today many new concepts we are learning. If anybody missed, you will also focus on this. I will explain once I get into this fine-tuned 5 minutes. First of all, how I find this 5 minute zone. Drop 1, 2, 3, 4 base candles and a rally candle. Again drop base rally is created within the same area, LOTL zone. Within the same area. That means this area strong order flow will be there. Okay. Next, what about 15 minute zone here? See here you have a rally, base, rally. It came, picked up the orders, moved up, again it came, picked up the orders, moved up, again it came and picked up the orders. That means you can observe some high liquidity zone in this area. At least you can confirm. That we will see in the 5 minutes time frame. Now within this 75 minutes, again you have drop, base, rally. This is the 15-minute zone as an horizon to this entire daily zone. See, this is the daily zone from here to here. This daily zone picked up the orders from this fine-tuned 15-minute zone. Of course, finally we will be looking for 5 minutes, fine-tuned 5 minutes. But before that, this 15-minute zone is also acting as an horizon. Okay, now the main time frame, 5 minutes. This is the area we are planning our trades. How we fine-tune. Here only I am going to teach you a very interesting point. Generally, you will ask these questions. Okay, you can draw drop, 3 base candles and rally, but what I did is, if I expand, you get better clarity. See here? That's why sometimes we need to zoom. This is a leg candle. Instead of taking this as a leg in, see this itself is a big candle. Leg in, 2 base candles and a rally candle. If you consider leg in up to here, you would draw drop, 3 base candles and rally. But because you are considering leg in, risk will be minimized and your trade plan will be much easy for you. Okay, fine. This is clear, no doubt. We have drop, base, rally. But here again you have rally, base, rally is there. Again here you have drop, base, rally is there. Why you did not draw these zones? Why you have drawn only this zone? This is the question you will ask. Okay. To answer this question, first let me draw wick to wick. You will get clarity. Okay, let me draw another zone. Rally, base, rally. Let me draw another zone. Drop, base, rally. Now you tell me, what is this concept? LOTL. You have a 5-minute zone, LOTL zone. This LOTL is having another LOTL. Where you have to plan your trade, here you have to plan your trade. Maybe if you want to minimize your risk, you can take type 2 proximal. Now this type 2 proximal is exactly in this zone. Now what you can do? You can delete this zone. See, now you can plan your trade here. And type 2 proximal you can plan here. But this is already tested. This area. Order flow may not be strong. Maybe or may not be. But this is the area. If you plan your trade, your risk will be very high. You can't handle the risk. That's why I deleted. Because there are chances this might be having weak. Sometimes price touch here and it will go. We will be missing the trade. There is no other option. You can't take extra risk here. You can't handle beyond 2% risk. That's why I deleted even this. Suppose the prices are moving from here, okay, let it go. I can't take because risk is high, I can't handle. See now drop, base, rally. Still I want to further reduce the risk. See type 2 proximal. Type 1 proximal already it picked up the orders. So type 2. Generally high liquidity zones, we take trades from type 1. Once type 1 is completed, we take trade again type 2 also. But anyway, this is the HLQ area mostly. This is the, because it is picking new zone is created from this zone. It could be HLQ area. And this is the horizon. Have you noticed always I am finding the horizons. Horizons from where order flow is started. Don't compare this horizon with lesson 22 concept. That horizon is different. That is lower time frame horizon to the higher time frame horizon. But here I am talking about the horizon where the real order flow is started. From here the actual order flow is started. This is the horizon for this rally, base, rally. So that's why always I prefer in the horizons, the trades from the horizons. If there is no clash between these horizons, this order flow and this order flow, there is no clash. At the time I prefer trade on this zone. But here clash means it picked up the actual orders from here. So minimizing the risk drop base rally. So if it reaches, it will fit exactly within our risk management point of view. See, today exactly prices entered. This is the how I am analyzing the stocks. I am not blindly taking wherever order flow is there. I am not taking the trades blindly. See, all these days you've been observing. I am always focusing on the origins whenever LOTL zones are there. See, in HLQ zones, many times what happens, LOTL zones will be created. Am I taking trade from the newly created LOTL zone, or am I taking the trade from the actual origin? Many times prices will be reaching up to the actual origin. Many times. There are few times we will be missing. Few times. But many times prices will reach. Because the origin, old order flows and new order flows, everything will be there. Old order flow means the zone when it is created, drop base rally. This is the old order flow. New order flow, again in this rally base rally, institutions again added new order flows, again pushed the prices up. At the time some orders will be again adding to this area, some more orders will be there. Mostly these orders will consume if the demand is, if the supply is very strong, and then it will reach here. By the time supply will weak, and this area strongly it pushes the prices up. You may ask a question, suppose this area also order will be very strong, what will happen? At the time price may not reach up to the origin. A little below it will reach, a little above it will reach, and again it will move. On that day you will be missing the trade. At the time you may ask a question, why can't we take a trade here? Yes, you can take a trade here if the risk is within your accepted level. If the risk is not within your accepted level, can you take a trade here? No. Where you have to take, within this area only you can take. Still if the risk is very high, you go to type 2 proximal. This is how you will be planning your trades. This is how you should plan your trades. Just don't blindly draw the zones and start taking the trades when LOTL zones are there. Properly analyze. Find the origin. From where the origin started, there you plan your trades. See today what happened? Exactly from this origin, prices entered. Before that, whatever the LOTLs, everything is gone, right? This is the origin. Prices entered. This time prices went deep inside. Maybe next time this might be violated. Or maybe institutions may create again a drop base rally and again push the prices up. That possibility is also there. If that is the case, next time onwards this will be acting as a high liquidity zones. There are higher chances will be there. If that is the case, we can take more trades from this zone until it is violated. Anything will happen. So that's why possibilities we are discussing. It may violate or it may turn into high liquidity zone. Anything. But anyway, we got a trade today. Successful trade. Till the 15 minutes target. We have drop base drop. There is a possibility some of you may drop base drop. This you may consider and you exit. That possibility is also there. This possibility is also there. You may book your profits here. But those who wants to capture your profits up to this level, because this is the actual plan and this zone is created when prices came to the zone, at the time the zone is created. Mostly we exit here. But those who wants to capture more profit, you can go for either 5 minutes trailing stop or 1 minute trailing stop. Go to 1 minute first. Here you have a 1 minute zone, drop base rally. After that prices did not come up to here. After that a new zone is created. Actually 5 minute zone is created here. That area, see? You have a drop base rally. Now shift from 1 minute to 5 minutes. This will hold even much better way. And this 1 minute zone is not violated. Again rally to base candles and rally is created. Rally base rally. After that within this 5 minutes area prices stayed for some time and again rally base rally. Actually, this is not a leg out candle, but this is a rally base rally here. Now reached this 15 minutes target. Or if you aim for even more, maybe this rally base rally is stopped out, might have stopped out here. You might have exited your trade here. If you did not book, further aiming for more target. But intraday, after reaching a certain level, you need to exit. See at what time it reached? At 1 o'clock 10 minutes. Aiming more target almost last 1 hour or 1.5 hour of the closing market is not really makes that much sense. Better book the profit here. If you have enough time, another 3 hours is there in the market. At that time, nothing wrong. You can aim for even more target. That is possible. That is possible. But anyway, you might have exited. That is one reason. But I am evaluating the performance of high liquidity zones point of view. High liquidity zones with 1 minute and 5 minutes trailing stop loss. How much we are able to achieve? What is the maximum it has helped us today? That is what I am calculating. I am not calculating my trades or your trades here. For me, most important thing is how well my HLQ zones are working. What is their performance? That is very, very important. Some of you used some of you definitely will use these trailing stops to aim for more profit. Today they would have got a big profit today. How much profit they would have got? 9,711, which is 6% ROA. Okay. So this is about HFCL, and NAVINFLUOR also gives. See, today all stocks gave profits to us. Interestingly, NAVINFLUOR has actually trade plan was not planned in yesterday when after the market hours, when this zone was created while analyzing, no plan at all in this zone. Why no plan? While analyzing the stock yesterday at 15 minutes time frame, first of all, this is a 75-minute zone. Let me show you that. Drop base rally. Because this rally candle is a very big candle, see the risk, it's a very big risk in the zone. Next to 15 minutes when you fine tune, see here, you have a drop base rally, again a huge, again go to fine tune 5-minute zone, fine tune 5-minute zone also, see again, you have a drop 3 base candles rally, see the big risk. Can you take a trade in this zone? No. So risk management point of view, I rejected this trade yesterday. But see today in the dynamic zone creations happened. In lesson 21, I explained dynamic zones concept. What is dynamic zone concept? The zones created during the live market. The fine-tuned zones created. Not the zones. Fine-tuned zone is the right word. Fine-tuned zones created inside the zone is the right word. That is the live market. We named it as dynamic zones. See here today live market. Morning 10 o'clock candle at 15 minutes, a drop candle is created. Then 2 base candles are created. Then a rally candles are created. Again rally base rally is created. But what is the origin? Or this is the origin or this is the origin? See, sometime before we discussed about the origin. So this is the origin. So that's why I focused on this origin. Now go to the 5 minutes time frame. In the 5 minutes time frame, see here, failed ERC, rally candle, dynamic view, rally candle. You have a base candle, type 2 proximal, and then rally candle. And prices moved, and again immediately they get into this area. See, it picked up the orders from this 5-minute zone and then reached this 15 minutes target. See, it is having 1:4.2 RR is there. This RR till the 15. Go to the 15 minutes time frame. Here you have drop base drop. After that, no zones are available. and reach in the dynamic way. 4.28 RR it has given. And when you got the trade, 10:30, 15 minutes candle. When it reached the target, 11:45, 15 minutes candle. Go to the 5 minutes, you get better clarity. You got the trade at 11:30 candle, 5 minutes candle, 11:55 minutes, 5 minutes candle. That means your trade is completed in 25 minutes. In 25 minutes, you would have got a profit in NAVINFLUOR 5,241 rupees profit as per one futures margin cost, and ROI is 4.2% in just 25 minutes. 25 minutes, 4.2% ROI means it's excellent, extraordinary. You are not holding your money for the whole trading day. You are just holding your money just for 25 minutes. Within 25 minutes, you got 4.2% ROI. And what is this concept? Dynamic zone creation, dynamic fine-tuned zones creation. That is more appropriate. I repeat again, dynamic fine-tuned zones creation. Initially, we didn't plan a trade, but live market, it gave us a trade opportunity. And in the retracement, it gave the trade and reached till 15 minute zone. See how sharply it moved once prices entered into the fine-tuned area. So this is about NAVINFLUOR. So many concepts you learned, you are getting good examples today. And LAURUSLABS, this again, hidden zone. It comes under hidden zone concept. How institutions cleverly planning their trades. Previously, we took a good number of trades, couple of trades from this zone as a dynamic trade. I think this is the one initially we planned the trade. Next again, I suggested you to take another trade from this zone. The next day again, we got a trade from this zone. At the time, zone is pierced, but still within this stop buffer, and prices reached that 15 minutes target. That day we got the profit. But I suggested you not to take a trade from this zone, but see, from the same zone only prices are coming again and again. See, here I suggested you not to take, but next day again it gave a trade. Again next day it gave a trade. Again today it gave a trade. You listen my advice and you feel like, okay, how we missed this, all these trades. You might be blaming me, right? But we have to follow the rules. But also I suggested you, I think yesterday's HLQ or day before yesterday HLQ analysis video, I suggested you, there is a, within this area, why again it is coming, I told you the reason. Institutions again within the area, they created a 1 minute zone, which is not visible to you because the 5 minute zone looks like a pierced zone. The moment it is a pierced zone, you ignore this area. But institutions created a 1 minute zone here. Go to the 1 minute time frame. That 1 minute zone now acting as a high liquidity zone. You can draw a zone like this. Rally base drop. This is how you can draw a zone. A 1 minute zone. Or if you are not convinced with this candle, if you feel this candle is a large candle, big candle ERC, this is the candle, rally base, rally also you can draw. It's all depending on how well you are convincing. This is the 1 minute zone. And this 1 minute zone now acting as a high liquidity zone. See here, rally base drop again created. What does it mean? A new zone is created again here, LOTL zone. If LOTL zone is created, there are higher chances this could be a high liquidity zone. But where you plan your trade, mostly in the origin. This is not the origin. So that's why I delete this. See how I prefer the origins? So next time prices come here, we can take a trade. See today, prices entered into this zone. Today at 12:20, prices entered into the zone from the origin. See how sharply prices came down. Lot of time prices were moving here. And moreover, this is the 12:20. After within 2 hours, market will be closed. You have to plan your exit because prices are moving within this area. If you draw a horizontal line, anyway, I am not considering this trade for our HLQ zones performance point of view, but I am telling you, somewhere here you would have booked your profit. If not here, somewhere here. After that again prices moved up, but this time they didn't touch, came very near to this and then again came down. So this area is not letting the prices go up. See, initially what happens? If you look into the 5-minute zone, the aggressive trade setup, it looks like it is a violated zone. Institutions are created an impression that don't plan any trades in this area. That is what the impression they created to us. But cleverly what they did, they created a high liquidity zone here. That we can see in the 1 minute. That is what I explained in yesterday HLQ video or previous days HLQ analysis video I told you. This is the one. You can also draw this in case if you are not convinced, this is the one. If you draw here, then it could be even more tests. This is the first test. Rally base drop is created. This is the second test. Again rally base drop is created. And today it is the third test. Just touched and came down. Fourth time today came very close, but this time they didn't, but again came down. See, came very close here and then came down. Then see how these concepts are working. So institutions, they diverted our attention by making sure they violated this zone. Immediately our attention is diverted. But actually further lower time frames they are doing their analysis and creating the zones. So that's why understanding institutions' mindsets are very, very important. Why I introduced this pierced zones concept? There are several usages of these concepts. You will be learning. In the next training session will be pierced zones. But I have to prepare a presentation. It takes some time for me because the recent time I am also quite busy. But in the coming weeks I will be explaining. At that time you will see the usage of pierced zones. This is one usage. Sometimes from the pierced zones only trades will take place, even after violation. The reason, lower time frames you have to go and you have to observe. See, all these are all your learnings. How many trades this zone has given, this area has given. Can you imagine? So we are getting excellent opportunities. But you need to understand the mindset of the institutions. That is a key point. Always we try to understand. If you are thinking like that, you will also develop the new concepts. See, when I develop new concepts, you will also be in a position to develop the new concepts, right? No one is great here. My mindset, your mindset, everybody's not mindset, minds, mind way of the way of functioning, our minds will be same. No difference. We are all human. But what is the difference? The mindset has to be changed. That is that mind is different, mindset is different. All our minds are same, but our mindset has to be changed. What is mindset? The way how we are thinking or the way how you want to understand. That level of mindset has to be changed. If that is the case, you will also identify the new things. You will also develop the new concepts. Nobody is exceptional here. Nobody is great here. Definitely I should accept I am not a great person at all. I am also like you guys. But only thing is I changed my mindset in such a way to understand the concepts in a different way, trying to understand the mindsets of the institutions, not minds of the institutions. I'm trying to understand the mindset. How I can able to understand? By observing the price action on the charts. When price action is happening, I will try to correlate something. I will try to derive some concepts from that. Sometimes I may fail, sometimes it may give a success. Whatever is giving success, that is what you learn in this course. And today you are enjoying the profits with the help of those concepts. The same concepts I applied to this NeoStock software, because I am a skilled person in the software development. So that is my experienced area. I was able to do the rest of the work. Because of the software today, we are able to identify the right stocks. See, 240 stocks are there. But how many stocks our software identified? Only 2, 3, 4, 5 stocks. 5 stocks identified. All 5 stocks gave successful trades today? Yes, including LAURUSLABS. Even though I am not considering for HLQ zone's performance point of view, still it gave the profit today. Some profit it gave. Definitely you might have got at least some 4% or 4.5% ROI you would have got from here to here. See the day, today's day could be a good day for premium subscribers. I'm sure majority of our premium subscribers enjoyed the profits today, because every stock gave the profit. Definitely one of these stocks you might have planned the trade. Maybe you might have ignored LAURUSLABS, but still. ABBOT, see how good profit it has given. HFCL, how good profit it has given. IOC, many of us might have missed on 9:15 candle. Okay, I agree. NAVINFLUOR, how well it has given the profit. In the dynamic view concepts, all these concepts you learn. Whatever you learn, as per that only we are getting the profits. So this is the beauty of these concepts. That is what you should understand. Okay. So hope this information will be useful to you. Hope now you will understand these dynamic views and hidden zones concepts in a much better way. Of course, you will see many more examples in the coming days which you haven't observed so far. When the time comes, we will discuss them, because we need to find the right charts while analyzing the stocks. Hope you enjoyed this session. Let's all meet again in our next video. Thank you.